Risk management is a continuous process in payment processing. It involves monitoring activity, identifying potential issues early on, and stepping in before small problems become big issues down the line. In many cases, this is also what prevents fraudulent transactions into escalating to account holds or shutdowns. A strong risk team protects merchants by keeping accounts compliant, transactions secure, and a business operating with confidence. Today, I'm continuing my conversation with Chayla Sanchez, our Director of Underwriting and Risk, to focus more specifically on risk management and how our team helps secure merchant accounts long after they're approved.
Hello, my name is Chayla Sanchez. I'm the Director of Underwriting and Risk at ECS Payments.
Welcome back, Chayla.
Thank you.
Okay, so today we're talking about risk, which is one of the departments that you oversee. For a merchant who may not truly understand what risk management is, can you give an overview of what it is that your team does for businesses every day?
Risk management is basically risk monitoring, and we're looking at the merchant's transactions and how they're processing. We're looking for any fraud, suspicious activity, or any card ban violations.
What exactly are you looking at other than just a general transactions? Like, is there specific points within the transaction, or what's the process?
After a merchant has been approved, they're onboarded, and we use the information that's on the application to kind of set up the parameters. So it's like a risk parameter that's preset. These parameters help us catch any potential activity that is unusual for the merchant. And think about it like a net. So all these parameters with different things on them, and we cast it out into our network, and then we kind of pull transactions that kind of are irregular or may have a risk trigger attached to it. Not all of these mean that it's like automatic risk. Sometimes it's a false positive where we have to just look at it and say, hey, this is in line with the business. Maybe we need to adjust our settings on our end.
Is the risk more so like you're trying to catch fraud, or what other factors are you looking for?
So we're trying to catch fraud, any suspicious activity, or any card brand violations. For like suspicious activity, if the merchant is a retail shop, they sell ice cream and they're running their typical transactions, 25 low ticket dollar amounts, and then they run like a $50,000 transaction. We're like, hold up, wait a minute, like what is this? So we'll catch the transaction before it goes through, and then we'll reach out to the merchant and say, hey, you ran a large ticket transaction way over your limits. Can you provide supporting documentation? And it's like an invoice, a receipt, or like the reasoning behind the transaction. Sometimes it could be that they're expanding their business, other times they're running a promotion, but we don't really generally see a large ticket item for a ice cream shop.
Are there any other factors that you're looking for when it comes to risk other than transaction size?
Other than transaction size, we look at their average ticket size. We look at their refunds. We look at their chargebacks. We look at the key transactions as well. Sometimes they're set up as retail, but then they're keying in transactions. And then we educate the merchant because then they're paying downgrade fees. Well, things like that we also catch. And then our set of parameters is very extensive. It just kind of is a broad kind of view of everything that we could potentially catch for like duplicate cards, duplicate card holders, excessive amounts that are exactly the same. We also look for any card testing or any enumeration attacks as well. Enumeration attack is basically when your gateway is being attacked by like a kind of like a bad actor, and then you'll see like a sequence of transactions posting all within like seconds of each other. The same card information, the BIN, but the card number changes slightly, and they're running like small dollar amounts to see if the card will go through. And if the card is going through, then they try to run a bigger transaction.
So once your team sees a red flag, what are the next steps and how do you contact the merchant?
The analyst will then review the account and see if we've already reached out to the merchant regarding the same like red flag, and then we'll evaluate the processing history and see like what their numbers look like. We'll look at their volume, their average ticket, their max ticket amount, their refund ratio, the chargeback ratio. If we need additional clarity, then we'll reach out to the merchant, and it can either be through email or through phone, and we'll just ask them like, hey, there's some activity on your account that we need you to clarify, if you can please address it.
So if you see a suspicious transaction, does our team stop it from going through, or is it something that has to be reversed? Or like if the merchant didn't realize it was happening, you caught a bad actor, what are the next steps?
Once a transaction is held because of the predetermined risk factors, then it's held for 7 days. So then we have 7 days to review it before a decision needs to be made. At that point, we'll reach out to the merchant and contact them and see if it can be resolved. Typically, it's sometimes just providing additional clarity or supporting documentation. And it's also really important to have the information up front. So when the merchant is underwritten and they're approved, and then let's say the parameters are not set up correctly, or they are running a big sale that, wasn't shared with risk, then that can kind of stop those issues from happening down the line because we already know what to expect with the merchant.
Yeah, so if they're like, okay, I'm gonna have some large transactions coming up, the best thing to do would be to call your department and inform you ahead of time. Kind of like if you're going out of the country, you call your credit card company so that they don't stop a transaction from going through on vacation.
Exactly, yeah. And it could be just emailing supporting documentation to us of a large ticket item. And then once the merchants get familiar with how we risk monitor, they're just really forthcoming of providing the information like, hey, I'm running a large ticket for this sale.
So there's always a chance of risk happening on any type of merchant account, but what can a merchant do to help reduce risk to their account?
There's a couple things that the merchant can do. One of them is ensuring that they have the proper cybersecurity and website requirements in place. This looks like being PCI compliant, so they can take card payments in a safe and secure environment. Another one would be having a website that's fully operational and has the minimum information where a customer knows the product that they're receiving and the ability to contact you if needed. This will reduce amount of refunds and also any chargebacks.
Can you tell me a specific story or incident where your team flagged a transaction or a possible risk scenario that saved a business from a legitimate situation?
We were monitoring a merchant account and we noticed suspicious activity of a large ticket item that was potentially ran through the system. So we took a pause, investigated the account, and reached out to the merchant to see if they could provide additional clarity on the large ticket item. And this was like an online retailer for like clothing. So they were very excited because they have a large sale. It's a lot more business for them. And then we asked for the supporting documentation. When we got the supporting documentation, he did share with us that this was an online order done like in the middle of the night. And when we got the information, we noticed that it was a foreign card and then it was tied to another business. So then we looked further into the business, like, hey, what does this business do? We couldn't really find a lot of information on it. You know, an established business that's buying like wholesale clothing is usually going to be more established. We advised the merchant like, hey, this doesn't look like a legitimate transaction. We recommend really just kind of not shipping the items out and canceling the order. So then the merchant was able to stop the delivery from happening, losing all the inventory. Would have been just terrible for his business. And then on the back end, we were able to stop the transaction from going through. If the transaction would have gone through, it could have led to a chargeback as someone disputing it as being a fraudulent transaction or their card he just stolen, and then he had already shipped the product out. So then it would lead to a chargeback, and then he would be liable for the chargeback, and then he would have no inventory for whatever he sent to this merchant. And then the team takes the time to really understand each merchant account and know what their kind of normal processing behavior is. So they're familiar with the accounts, they're reviewing them every single day, and they're flagging things that are kind of not consistent with the business. And then the merchants then clarify if it's good to go or if there's an offsetting sale. Sometimes we'll see like a sale, like a refund go out, and it's like a $3,000 refund. And you're like, wait, I can't find the original card on our system where it was ran on. So then the merchant will be like, oh yeah, I refunded on a different card. Other times it could be that an employee is refunding their own card and it's like they're stealing from the business.
What does this scenario reveal about how our business protects merchants in the long run?
We're really looking out for our merchants and preventing potential fraud, suspicious activity, and educating the merchants to process in a safe environment. And this builds sustainability over the long run, but also long-term relationships with our merchants because we are looking out for them.
How does risk collaborate with underwriting, sales, merchant services, ISO support? What does that teamwork look like?
Risk collaborates with many departments. From the underwriting standpoint, it's when the application is initially approved. We set up the parameters, and then underwriting is good to share any details that are relevant to the merchant's processing history, such as any large sales or potential business growth or information that we should be aware of that's part of their business. We also work with sales when attention is needed on the merchant account as far as like requesting supporting documentation or limit increases as well. We work with merchant services when the merchants call in regarding their account details. We're able to look into accounts and transactions that were ran, and also merchant services helps with helping them settle out their batches. We work with the dispute and documentation department. So when the merchant needs to update their bank account or change a contact, change their location, change anything regarding their business details, the request will come in through customer service or our ISO support team, and then that will then go into our dispute and documentation, and then underwriting and then risk. And then we'll review the changes and kind of communicate that way.
I didn't realize that when an application is being underwritten, risk is kind of involved in the process by setting their terms?
The parameters.
The parameters, yeah.
After the application is approved, people think that it's just like, okay, I'm done with underwriting. We actually continue monitoring. Part of risk's role is to also do periodic reviews on the merchant accounts. So this looks like reviewing them on a yearly basis, on a daily or monthly, depending on the business type that they have. The goals of the review is to assess the business from the initial approval to where they are now. Do they have a sudden growth? Are they experiencing some financial losses? Or is there anything reputational, legal happening outside of the space that we need to be aware of? Are they going through bankruptcy? Do they have a lawsuit against them? Anything like that, we like to know about it, document it, and have our eyes on it just in case it becomes any issues down the road.
As far as increasing their limits or their ticket sizes, what does a merchant have to do for that type of next step in the process?
For limit increases or like ticket sizes, it kind of varies. Sometimes the gateways will notify us when the merchant is within 10% of their max limit, and then we'll look at the account and update it to kind of adjust it. Other times the merchant's trying to run transactions and they won't go through because they don't have the right limit set up. So then they'll have to either contact their sales rep or call into customer service to send in the request to our ticketing system to be able to increase the limits. Well, once we review and approve the limit increase, then it has to get updated in the system, which is what account coordinators handle.
What would differentiate a denial or an approval for an account limit increase or ticket limit increase?
I think it varies depending on the business model and what they intend to process and like the reasoning behind it. If the merchant just calls in and wants like a $500,000 limit increase and doesn't provide any details, of course we're not gonna be like, yeah, sure. Limit increases depend on the business model, what they offer, and the need for the increase. If it's an apparent need, we can look at their average processing, their average ticket, and see like, hey, looks like they're pushing their limits, we should increase them. Other times the merchant has acquired a different like service within their business and need a limit increase to process transactions, or they were pulled into a big project that now they need more volume to be able to process these transactions.
So your day-to-day work, you're monitoring, viewing merchant transactions. How do you do that? Is there a specific system or setup that you use? I know that we have the payment connection, which is newer from what we had in the past a few years ago. Is that what you use, or how has that changed your workflow?
TPC system has really organized the flow within risks, and it has made us more efficient in reviewing our merchants on a daily basis. We have the ability to have a dedicated risk section to monitor any suspicious activity and document it all in one area. And we also have a risk watch list where we can watch our merchants that are a little bit more high risk more closely. We can do monthly, daily, or weekly reviews on them.
So in closing, let's wrap it up with 3 pieces of advice for merchants from this conversation today that they can take away to make sure that their account is more secure. 1,
be PCI compliant so you can process payments in a safe, secure environment and avoid fraud and enumeration attacks. Number 2 would be to strengthen your internal policies and procedures within your organization, having better refund policies, clear delivery timeframes, and a way that the customer can contact you efficiently. Now, number 3 would be to increase communication with our risk department if there is any major shifts in your business that may impact your processing activity.
Love it. Well, I appreciate you joining me today and educating me on how risk works, educating the merchants on what they need to do to become more secure and safeguard their transactions and their business as a whole. And I hope that it was really helpful for those that are watching.
Thank you for having me.
Risk management is all about protecting merchants. The right oversight helps businesses operate smoothly and avoid costly disruptions. If you enjoyed this conversation, explore our full library to see how ECS Payments protects merchants with experienced teams all in-house. Until next time, I'm Shanna with ECS Payments.